Hello everyone and welcome. Today we learn about financial modeling and valuation. What are they? What are their types? What are their use cases? And we'll also see some examples and templates along the way. First of all, what is financial modeling? Financial modeling is financial calculations in data used to take sensible business decisions, which is done with the help of already available financial data of the company. The entity's future financial statements are calculated based on the assumptions and conclusions regarding the future of the industry and the company. Moving on to the types of financial models, there are various types of financial models such as three-statement model, merger model, DCF or discounted cash flow model, LBO or leveraged buyout model, comparable company analysis, initial public offering or IPO model, option pricing model. We will not be going into the depth of these models. Now, we'll see an example of a three-statement model. Here on the screen, you can see an income statement in which 2016, 17, 18. For these years, actual financial data is provided, and on that basis, we have calculated forecasted figures for further years. Now, we move on to the balance sheet. It is the same as the income statement. For 2018, we have the actual figure, and for further years, we have forecasted and calculated on the basis of the actual figures. And here is the cash flow statement. Here is the DCF, discounted cash flow model for a pharmaceutical company, in which we calculate the future cash flow and be discounted to the present value. This is the other half of the discounted cash flow valuation. Here we can see the LBO or leveraged buyout model template for a company, a retail company. And here is a comparable company analysis template for companies Coca-Cola, PepsiCo, Pepper Snapple Group, Monster Beverage Corporation, National Beverage Corporation. Now moving on to the use cases of financial model. On the screen, you can see following are the use cases. First, we can use it to assess future operational and financial performance of the business. We can use it to estimate the requirements of capital expenditure in the future. We can use it to understand the requirements of working capital and long-term funds. We can use it to understand what will be the free cash flow generation of a company. We can use it to value a business and their equity shares. We can use it to carry out various ratio analysis such as profitability, liquidity, and capital structure ratio, which are really useful for a financial analyst. And moving on, we can use it to understand the growth of sales, and we can make amends in the business accordingly. We can also perform stress analysis using the financial model. Here is a sensitivity analysis performed on the basis of a financial model. Now, we move on to valuation. Valuation is the analytical process of determining the current or projected worth of an asset or a company. There are many techniques used for doing a valuation. Now, we move on to understand what are the different types of valuation methods used. There are two main categories of valuation methods. First, absolute valuation, in which the model attempts to find the intrinsic or true value of an investment based only on fundamentals. Looking at fundamentals simply means you would only focus on things such as dividends, cash flow, and the growth rate for a single company. Valuation models that fall into this category include the dividend discount model, discounted cash flow model, residual income model, and asset-based model. Earlier in the video, we have already seen an example of discounted cash flow model. Now moving on to the second category of valuation method, which is the relative valuation model, which in contrast operate by comparing the company in question to other similar companies. These methods involve calculating multiples and ratios such as price to earning multiple and comparing them to multiples of similar companies. This is an example of a dividend discount model template. we learned about, which falls in the category of absolute valuation method. Now we learn about the use case of valuation. Valuation can be useful in trying to determine the fair value of a security, which is determined by what a buyer is willing to pay to a seller. So that's it for the video, guys. Thank you for tuning in.